All right, now we're looking at a report which is to do with the retail sector in India and how we are seeing that much more activity in Tier 2 cities. In 2023, this report states that 35 domestic and global brands, which include the likes of H&M and Marks & Spencer and Gap, all of them have expanded into Tier 2 cities like Indore and Mangalore, Patna, among others, and they're all driven by the strong demand they're seeing in Tier 2 cities. This data coming through from CBRE reveals a total retail stock of 29 million square feet across 14 Tier 2 cities, with Jaipur, Lucknow, Chandigarh leading that entire pack. There was a time, of course, when metros used to attract the masses. Now, with this clear diversification of retail hubs in the country, the question is, does it mean that the Tier 2 cities are soon coming at par with the metros in terms of their ability to get lucrative jobs, to set up businesses for higher standards of living, for higher buying power as well? Let's speak about their findings this research has thrown up. Abhinav Joshi joins us. He's head of research for India, Middle East and North Africa at CBRE. Abhinav Joshi, it's good to have you with us. Glad you could make the time to join us on India tonight. But, there have been questions about whether or not our demand-driven economy has enough demand now to sustain the kind of growth that we've seen post-pandemic into 2024. Whether that is likely to continue or not has been an ask. In your research, the question is, are the Tier 2 cities turning out to be those growth drivers that our economy needs? Cities like Indore and Chandigarh and Patna and Ranchi and Goa.
Well, thank you, Vikram, for inviting me on your channel. I would say I totally believe that the kind of aspirational consumer base that we have in some of these smaller cities, this demand is going to continue, not just in 2024, but later on, further into the late 2020s and up till 2030 as well. Because the kind of retail real estate ecosystem we're talking about, it's so underpenetrated, it's so heavily unsupplied, especially when it comes to organized retail, that most of these cities are just taking off. And as our economy expands, yes, there might be some level of uncertainty in the short term, let's say in the next couple of months. But as the economy comes out of that, and as the consumption movement expands all over again, it's not just going to be led by the Tier 1 cities, it will be led by Tier 2 and Tier 3 cities also. Let me just give you a very simple metric. As per industry research, almost 50% of the urban online shoppers in India are coming from these Tier 2 and Tier 3 cities. And that percentage will reach up to 60% by 2030, which means the small town or small city India, rather, would have a much higher proportion in the e-com retail trade. But at the same time, that will also transition into a very strong consumer base for physical retail.
Itself, I want to ask you about the split between e-commerce and physical sales. What's the trend when it comes to Tier 2 cities? How do you see that difference between the two change in the years to come in these markets?
Well, at a pan-India level, of course, e-com has come a long way. 10 years back, its share used to be just about 2 to 3%. Today, at a pan-India level, it would stand at about 9 to 10%. So the 90% bit is still coming from physical retail. It might be organized or heavily unorganized as well. In Tier 2 cities, I would say the number is relatively higher, could be anywhere from 20% to 30% or even higher than that, because how unpenetrated they are when it comes to shopping malls or when it comes to quality shopping streets. And as a result of it, because of rising brand awareness, rising disposable incomes, the customer base in these smaller cities wants access to that world-class goods and services and world-class brands. And that's how e-com really helps them. And, in many ways, it's sort of also helping physical retail, because most of the brands are testing waters in these smaller cities through this online marketplace model. And once they are able to generate a loyal customer base and a certain acceptance, then they transition into the physical retail format. So this omni-channel strategy that we talk about, a mix of offline and online, that's succeeding not just in Tier 1 India, but in Tier 2 India as well. But the penetration rate would definitely be high in Tier 2 India.
The global brands as they go deeper into Tier 2 and Tier 3 cities in India. But what about the impact of their going deeper into the Indian markets on local businesses? How is the entry of the bigger retail brands now affecting the business of, say, local kiranas, etc.?
Well, I think from just an alignment perspective, a lot of these larger brands are aligning themselves with the local players. That's the big difference that we've seen. The threat that local retailers always felt from, these large-scale global brands or national brands coming into their territory, that threat hasn't really, it's not really proven to be true, because there is a significance of alignment. I would say from a supply chain perspective, these local players already have developed supply chains. So these larger brands can sort of tie up with them, enter into joint ventures and enjoy that, supply chain infrastructure.
You mentioned the kind of brands that are expanding their presence in these cities, but overall, within the retail sector, tell us about the segments within the sector that are leading the spread into the tier 2 cities that have been named in your report. Do you believe the segmental mix is going to change now going ahead from here?
Well, I would say the most popular is fashion and apparel. That's across the board. Whether you have mid-range fashion or several athleisure brands who are also expanding in these markets. I won't like to name individual brands. You have F&B. Within F&B, your fast food QSRs, they're gaining immense popularity for the last couple of years, and they're scaling up. So these tier 2s have become a very important part of their future projections and their India strategy. You have a lot of restaurants. What's very interesting is that a lot of these smaller cities have their own local cuisines. So you have a lot of innovative new formats and restaurants that are coming up offering these cuisines as well. So you have fashion and apparel, you have F&B, you have homeware and departmental stores, you have hypermarkets, and a little bit of luxury as well, which is very interesting because some of these cities have their dedicated business community and they develop HNI community. And again, that affluence, that attraction towards brands and that attraction towards luxury. So, there is some penetration happening on the luxury front as well, but a lot of jewelry showrooms are also opening in these smaller cities. So that just sort of shows that the propensity to spend is going up.
That propensity to spend, I have one question about that, Abhinav Joshi. Recently, the RBI came out with stricter norms for unsecured retail loans. So when you see a rise in people's discretionary spends, like the kind you're seeing in these tier 2 cities, what does your research indicate about what's fueling it? Is it the growth in demand that stems from credit growth, for example? Are they earning more, spending more, perhaps saving less? Or like someone else on the show was telling me, is it driven by growth from investments in certain asset classes like the equity markets that had a great run in 2023?
I think it's a mix of all of them, to be honest. We're talking about cities which are very prominent economies in their parent states. So they already have a thriving economy. They have a thriving economic base. Some of them have thriving services industry or very strong manufacturing base as well. So as a result of which, they have that business community, that HNI community that's willing to spend. As far as the younger population is concerned, yes, there is that, the rise of the IT sector or the tech sector or other services industry, which might be facing some weakness as of now. But I think on a long-term basis, several tech corporates also want to diversify out of the larger cities to these smaller cities. So, as a result, they generate that, employment potential, and that has an impact on the, the purchasing power and the income levels in these cities. What I would also like to add is, yes, there is deployment happening in equity markets. I would say even real estate, for that matter, has given handsome returns in the last couple of years. So there is deployment happening in real estate as well. And yes, there is a little bit of credit-led growth as well. If you see the RBI numbers, if you look at the mortgages, if you look at personal loans, if you look at loans for businesses, they've all grown by double-digit numbers for the last 2 to 3 years. So I would say it's a mix of all of them.
Well, there are fascinating insights that are coming through in the report that you've put out. And of course, we will be tracking the space. Like you said, it's going deeper. It's going into tier 2 cities. You're seeing the addition of more and more cities and tier 3 as well. And of course, that entire evolution is going to continue in the retail space. When you talk about the consumption story in India, we are seeing that boom take place, and we'll be tracking it as it moves along. Abhinav Joshi, thanks very much for joining us on India Tonight.